Good morning, everyone. This is Katie Novotny here at Premier Marketing. I wanted to thank you guys for logging in this morning and taking the time to join us. We've really been talking a lot about this product. It meets a lot of niches, and we just thought we'd get the pro on board and have him walk us through. As a reminder, you do have the option to type in any questions as they come up. As we get a minute, I'm going to try to answer things throughout the call, but in the end, we're going to take time and go through everyone to make sure everybody's questions are answered. So with that, Lawrence, would you like to take it away?
Yeah, absolutely. Thanks, Katie, for the introduction. I appreciate it. And if you don't mind going that route, I really do enjoy answering questions as they come up throughout this thing. I think it keeps it a little more interactive and exciting for all of us. So please don't hesitate to type in your questions. My pleasure to answer them as we go, or if there's a backlog of them, happy to answer them at the end as well. For those of you who I haven't worked with, my name is Lawrence Favenzio. I'm a business development specialist here at NGL. Premier is one of the main focuses of what I do every day. I want to take the best care of Katie that I can so she can take the best care of you. Been in this small LTCi world now for about a decade, bouncing to different parts of it from field sales. I have some agency experience, worked for one of the nation's leading trainers and consumer advocates, and now on the carrier side of things. So professionally, all I've ever had to live, eat, and breathe is long-term care planning. And I've been with NGL now, including my time with their TPA, about a year and a half. So to get started today, I really just wanted to keep this relatively concise. I only want to take maybe 20, 25 minutes of everyone's time, and the remaining time of the half hour there for Q&A, so we can just hit some key things. First, for those of you who aren't too familiar with National Guardian Life, I want to give you just a bit of background on who we are as a company. Then I want to go into the product itself that we call EssentialLTC, what some of the best-selling features are within the product, and some sales ideas that will tie into when and how to use a couple of these product features. So for those of you who aren't too familiar with us, NGL is a company that's been around for over 100 years. In 2016, we entered this world of long-term care insurance, but we did it partnering with an expert TPA who's been doing nothing but long-term care for 30 years. They administer over a couple 100,000 insured policies, and we're able to rely on what they've learned over the years. And not just them, but what the industry has learned over the years. Look at what's happened to long-term care insurance in the last 30 years, or even more specifically, just the last 10 years, right? So NGL is able to make decisions today, deciding to focus on long-term care insurance since we came into this world in 2016. We're able to make decisions today looking forward. We don't have a history of rate increases because we don't have a history of those legacy blocks of business where some poor assumptions were made, say 10, 15, 20 years ago. So we're very excited about long-term care insurance, and we're able to create a product that has competitive rates with some really rich and comprehensive product features that allow you as the long-term care advisor to create some very flexible plan designs. And we're able to do that, one, based on all that experience, and two, we're trying to create a very well-balanced risk pool via prudent underwriting. You know, we're not going to make some of the mistakes in terms of underwriting that were also made 20, 30 years ago that created some very risky blocks of business for some of our competitors out there. For some of you who may be in various parts of the country, the product is currently available just about everywhere. The only states where we're not available yet are California, Montana, and New York, and we're working on all three of them. Of the three, California is likely to come this year. I'm hopeful it'll be in the first half of this year. We actually have a couple meetings we're trying to schedule with the department there to try and move things along because we filed about 3 years ago in California, and we're hopeful to have that available soon. As for the remaining states, light blue, we currently have a partnership product available. Dark blue, the product is available, not yet partnership. For the remaining partnership states that are not yet light blue, we are working on them. For example, Pennsylvania, Virginia, Maryland, and New Mexico. We all hope to have partnerships sooner rather than later. As for the product itself, when I say we created something where we tried to provide you flexibility in what you have available to offer to your clients, we really want EssentialLTC to be what you want it to be. It's competitively priced, has some pretty unique benefit features, and we're going to go through each of the items on this list here. And you'll see it can look and act and feel like traditional long-term care insurance. I mean, straight down the middle long-term care insurance. Or it can also kind of look, act, and feel like it's a hybrid policy, but it's on a traditional LTCi chassis. And the way we do that is with that second to last bullet there with our return of premium and or surrender features. So to begin, I think this product has a tremendous potential for couples. That's probably one of our, Katie mentioned niches in her introduction, one of the top niches we fulfill. Because for couples, we'll issue a joint policy with a joint premium, but each of them have their own separate benefit pools. They'll never touch each other's benefit pool. And for just about all couple policy or illustrations that I run, I include our shared benefit amount rider, which, as you'll see, is a separate third pool of dollars that becomes accessible if either or both insured exhaust their own original benefit pool. So how this works is, let's say you're showing a 5-year benefit period. Well, then each insured has their own 5-year benefit period, plus there's a third 5-year benefit pool via the shared benefit amount. So if you look at some of our competition out there and you use their shared, you have 2 separate policies, each 5 years. One can bridge over to the other. But with us, you have one policy with 3 separate pools of money of 5 years each for 15 years total versus 10. This can be a pretty compelling argument when you're out there quoting couples. So this is one of the key pieces that I wanted to first point out. 1, the joint policy, and 2, the shared benefit amount, as you're out there trying to create solutions for your clients. We do have a lifetime benefit period available. We also have 2, 3, 4, 5, or 6-year benefit periods available, but many folks aren't aware that lifetime is back with this product. So you do have a lifetime benefit period option. In terms of premium payment, you have a single, 10-year, or lifetime premium payment option. So if you're out there having conversations and folks hear about some negative press and rate increases, you have a way to offer them a guaranteed premium. With our single premium, if you look at the specimen policy and that single premium payment endorsement, it says the policy is fully paid up and non-cancelable on day 1. Okay, so single premium with this EssentialLTC product is a great way to offer a guaranteed premium with a traditional long-term care product. Another way to address that possible rate increase pushback would be with the 10-year premium payment option. Once you're paid up and that 10-year premium payment period is complete, say there's a rate increase in year 15, they're not affected. They're fully paid up at that 10th year, okay? So that's another way to mitigate that concern. And even if you do have the lifetime premium payment, remember our position in this industry. This product was priced with a lot of knowledge going into it with no legacy business to worry about. So potentially, this product could have more premium stability going into the future. It is still guaranteed renewable. Could rate increases happen? Absolutely. I just don't have the crystal ball to guarantee that it will never happen on a lifetime premium payment. But compared to business of yesteryear, we do foresee this product having a pricing structure that would provide some more stability looking into the future. Now, to talk about some other really unique features on a traditional product, we have return of premium options along with surrender options. The return of premium options, we have 2. We have a limited and a full return of premium. And then each of those is available with an optional policy surrender if you'd like it. So when we hear about that, well, what's return of premium mean? Well, if you die and never need care, there could be a benefit to your beneficiary. Well, that sounds a whole lot like these asset-based products, doesn't it? And a lot of those are paid with a single premium. So there you have a couple features where you can really take a traditional product and sit it right next to an asset-based or life insurance-based product and still have a conversation. Because what are you really doing when you're having that conversation? Well, you're saying, Mr. Client, if you need long-term care, this EssentialLTC can provide you a long-term care benefit. If you don't need long-term care, well, this EssentialLTC could provide a benefit to your beneficiaries if you die. Or, Mr. Prospect, if you decide you wanted to cancel your policy, well, this policy holds a surrender value that can be up to 80% of your total premiums paid. So you could just change your mind. So whether you live, you die, or you decide you want to cancel, this policy could potentially provide you a benefit. So let's delve a little more deeply into how these return of premium and surrender options work. So your first bubble here is our limited return of premium rider. And how that works is we're going to look at premiums paid. We're going to reduce that by any LTC benefits received as claim payments. And if there's anything left, it goes to the beneficiary upon death of the insured, or second to die if it's a joint policy. So you'll see that second line within the first bubble. If the claim is paid is much larger than premiums paid, the beneficiary would get nothing. So what that rider does is it works exactly the way the hybrid, quote unquote, life insurance-based policies work. You have this benefit, it's reduced dollar for dollar by claims paid. If there's anything left, beneficiary gets the money, right? Now the full return of premium rider is another really interesting piece, because this is something that no life insurance-based policy can do. With the full return of premium, we're going to look at premium, and even if we pay you millions of dollars as LTC claims, we're not going to reduce that amount by anything. We're just going to give the exact, every penny of that premium paid to your beneficiary when you die, or second to die at a joint policy. Okay? So it's a pretty compelling feature. Yes, full return of premium costs more, but if you have the money, this is a very, very interesting piece of this policy. The next bit, I'm going to talk a little bit about the surrender options. So you can have either of those, the limited or full return of premium, and for a little bit of extra premium, you can add an optional policy surrender to it that grades up, as you can see on the screen, to 80% of premiums paid in the fourth year, and it stays there for the life of the policy. If there were any claims, it would be reduced by claims, but this addresses that cancel piece of the bubble. Now, as many of you know, most people who buy long-term care insurance never get rid of it. So that's why we created the return of premium options with or without the surrender piece. Okay. So the next bit I wanted to talk a little bit about is, for those of you who might have clients who own a business, even a small business, or for those of you who might have clients who are executives at a company, since this is traditional long-term care insurance, tax-qualified long-term care insurance, even if it does have those return of premium features, it potentially still could be deductible, whereas life insurance premiums are not deductible. So you can create these, quote, hybrid style plans and use them in the work site for these executive or business owner types of features. So what program do we have available for this? Well, with EssentialLTC, we created a unisex employer group rate class. So it's one accept deny rate class for approved employer groups. And it has the same premium available. So if you have the same plan design, it's going to cost a 50-year-old male X. It will cost the 50-year-old female, same exact thing. And a 50-year-old joint policy, both together, will cost the same exact thing. So again, very compelling for couples. What do you need to get a group approved? It's a 2-page application for approval of employer group. Requires one simple signature from a rep at the group, whoever that might be, the owner or an HR person. We'll look at just about any business with 5+ employees. We generally do no overall underwriting on the group. We're not going to ask for a very comprehensive census and we're not going to analyze all the data or anything like that. Generally, you send us a group with at least 5 employees, we'll approve the group for you to use the employer group rate class. The exception might be if you send us a group called Bomb Testers LLC, we might have a couple extra questions for you. But beyond a scenario like that, generally we're approving groups if you send them in. Because we're going to underwrite the individual. So why underwrite the group? So we tried to create a simple, streamlined process to get your group set up. We'll look at any business with 5 employees, and minimum participation varies by state. It's between 2 and 5 issued employees. So we tried to create something that's, you know, a great niche for small businesses or small business owners. And if you use the employer group rate class, we're not going to reduce your commission. There's no comp reduction. Okay. So great potential in the work site. Now, the last bit,
Lawrence,
and I know, let's see, we're about halfway through our time. Oh, go ahead, Katie.
Hey, real quick, 2 things. One, the question was posed is, can the employees have different payment options? Could you possibly have a 10 pay and a lifetime pay all under one group?
Absolutely. Yeah, we're not going to restrict. We tried to keep this program really easy. We're not going to restrict anything. So every single person in the group could have a completely different plan design, completely different payment option, if that's how the group wanted to do it.
Okay, and another question was, can IRA money be used for the single premiums?
No, because that's technically qualified money. You can use non-qualified money. I'm actually going to talk about 1035 exchange in a moment, but you cannot use qualified money. You'd have to take a distribution out of the IRA first, and then there's a taxable implication there, and then you can use that premium to pay, or that money to pay for your premium. But you cannot use qualified money to pay for long-term care. But that does lead great into the next sales idea and topic is we accept 1035 exchange. So for those of you who aren't too familiar with this, I'm going to do a very quick kind of high-level overview that I think is pretty simple to understand, especially for those who aren't aware of what this is and how this works with regard to long-term care insurance. So in a nutshell, because of the Pension Protection Act that was enacted in 2010, you can look at the surrender value of an existing non-qualified tax-deferred annuity or the life insurance cash value, okay? So non-qualified annuity or life policy. You can take both the principal and the tax-deferred gains to pay for long-term care insurance. And the nice piece of that is the benefits that are used to pay for care when you need it are still tax-free, okay? So let's say someone eons ago put 80 grand into an annuity and now it's worth 200. Well, they have about $120,000 worth of tax-deferred gains that if they took out of there, they'd have to pay tax on. But if you use that $200,000 to pay for a single premium long-term care insurance, what you've done is you've taken a potentially taxable asset and created tax-free long-term care reimbursement benefits. Really compelling conversation to have. Okay, and we're going to talk a little bit about at least how I found some success in the field and having that conversation when I was there. So a couple quick things to keep in mind first. The annuity and life policy must be non-qualified, can't use qualified money. The amount is assigned directly from the surrendering company directly to NGL, and it has to be a like-for-like scenario. So same owner or owners and same insured or insureds. So if it's an individual life policy for, say, a male, it's going to go into an individual LTC policy. Okay, we can't go from individual to joint, for example. But if it was a joint annuity, those funds could go into a joint long-term care contract. Okay, so it has to be same owners, same insureds. And keep in mind, again, that last bubble there, single premium exchange guarantees no long-term care rate increase, non-cancelable, fully paid up on day one. So how are folks out there finding success and having this conversation? Well, at least the way I did it, for what it's worth, at the beginning of this presentation, I would tell the client that, look, I can help you in one of two ways, because you told me you want to self-insure, right? Well, I can help you self-insure. The other way I could help you is transferring this risk to a long-term care insurance company. And to do that, we use your available income or assets. But what if I told you, I can help you do what you want to do, which is self-insure, but I can help you do it longer and better than you can do it on your own. Can I show you both of these options? And that was my key. Would you mind if I showed you both? Opened it up to a yes most of the time. Generally, if I just said, I can show you how to transfer the risk with long-term care insurance, it's an easier yes or no. But I've at least piqued their interest with one of these two options, so that, would you mind if I showed you both? Creates a pretty good chance that you're going to get a yes out of them. So for the latter of the two, to relate to our 1035 conversation here, generally you look at their scenario, and let's just call this a typical asset portfolio, right? How are they going to self-insure? Well, it's typically with some life insurance they have, or with some funds in an annuity that they have. Maybe for some people it's in some cash reserves. But for argument's sake, let's say for this couple, it was their life insurance. Well, if I 1035 exchange that life insurance cash value into EssentialLTC, I'm creating a much larger pool of dollars for your long-term care benefit. So that's going to help you self-insure longer and better than you are going to do it on your own, right? Because your fear was, what if I never need care? Well, let's look at this a little more deeply. If you need care, you've got a much larger pool of tax-free long-term care reimbursements. If you don't need care, we'll give you every penny of your premium back to your beneficiary. And let's say you decide you change your mind and you don't like this thing anymore. Well, you have a surrender value up to 80% of your premiums paid. So how do we really structure this thing? Well, we looked at this earlier, right? You have a lifetime benefit period option, you have a 2 through 6 benefit period option, and you got a joint policy with the shared benefit amount. So if you live, we've got these great features to help design this policy. If you die and never need care, we have these return of premium features that we talked about earlier. Or you decide you want to cancel, here's your surrender value. So you've created a really compelling argument here of, I can help you self-insure better and longer than you could on your own. Or if you're really not concerned about the die or cancel, let's get you some great long-term care benefits and use money that you're going to have to not pay tax on via 1035 exchange. Okay. So I know we're nearing the top of the half hour here, and we're going to leave a few minutes for questions, which is going to be great. This timed out pretty well. Again, I just want to leave this with, we really tried to create a nice, flexible product that can be what you want it to be. And it's got just about everything you could want on a traditional product in terms of the joint policy, shared benefits, a lifetime benefit period, single 10-year or lifetime premium payment, and the return of premium features. This thing, as Katie said, can fill a number of pretty interesting niches as you're out there having these long-term care planning conversations. So with that, I know it's a lot of information in a short period of time. Please type in your questions. I wanted to leave Katie's information up here because Katie's wonderful. If you call her, I know she's going to take great care of you. And happy to field any questions that have come in while I was going there.
Okay, well, I actually have Richard that has his hand up. So I'm going to unmute your line, Richard. And if you want to pose the question, that'd be great. Okay.
I hope I didn't put Richard to sleep.
No, and out here. It says it's self-muted. All right. Oh, here we go. Sorry about that, Richard. It says I, for some reason, cannot unmute you, but I see here it says, will a policy issued from a non-partnership state qualify for partnership policy? So I think what he's asking for is once we have it approved.
So
I know you and I just ran into that.
Yeah, so let me address the question. If you, let's say you're in, Mississippi. Mississippi does not have any partnership legislation right now, okay? If they never do, that policy will never be partnership. However, if you get a partnership policy in any other partnership state where we're issuing partnership policies, that partnership protection is reciprocal to every other partnership state except California if the insured moves. Now, let's say, for example, you get a policy in a state that is not yet partnership, but does have a partnership product available or partnership program. We're just working on the filing. So let's say, for example, Pennsylvania, we haven't released partnership yet, but we expect to in the near future. we actually do what we call a partnership exchange, where we go back to the existing policyholders and give them the opportunity to exchange their policy for a partnership plan. So if you sell a non-partnership policy that would normally qualify for partnership in Pennsylvania, we'll give them an opportunity to get a partnership plan and just exchange their old one for a partnership policy. So I'm not exactly sure where the direction of the question went, but I think I covered any scenario that might apply to that. So if I didn't answer your question, okay. Please type in another note and I'm happy to.
Okay, lots of questions coming in. First of all, does NGL have marketing material for the employer group?
So in terms of consumer-facing marketing, and I am aware right now we're a little lacking in that department, we have a consumer brochure available, and now that sales and marketing has come under NGL's roof from our TPA, that is one of the first things I've asked our marketing team to build out, is some additional consumer-facing marketing pieces. One of those items would be something for you to have a conversation with an employer, so like an employer-style brochure. And I also asked them to work on a like an employee education presentation type of a thing, a PowerPoint. So I don't have those things approved right now for consumer use, but they are on our radar.
Perfect. Lot of questions coming in about quoting the product without an appointment, needing to be pre-appointed. Do you want to touch on that? I think first and foremost, I guess our message here at Premier would be, give us a call. Let's talk about it. You know, we can kind of get you started, but in order to write anything or anything like that. But as for your side, do you want to touch on pre-appointment, non-pre-appointment, how you guys look at your contract?
Yeah, so most states, I think there's only like 3 pre-appointment states. Most states' appointment will be just in time. As for getting some product information or some agent marketing materials or a quote, I would say call Katie. We're not going to restrict Katie from giving you a quote if you're not appointed. There's no reason why we would. You know, we want you to get out there and at least consider us. And, you know, we want to be one of those go-to arrows in your quiver. You know, we want your business. So, you know, Katie, I don't want to speak on behalf of Premier and any, you know, procedures you have, but from my perspective, if you'd like a quote, I know Katie would love to give it to you, and we're not going to restrict her in any way.
Yeah, I mean, I would like to reiterate that too, is same thing, is we want you guys to be comfortable. You know, for anybody that has sold long-term care, you know, sometimes you can go in with one idea and it's a completely different one. So if it's one of those, we want to talk through it beforehand. I welcome that. You know, that is something that we're here for, and do bear with us, because it's, you know, if you ever leave me a message or shoot me an email, I will get back to you as soon as possible. A couple other things that are coming up. We have Jay asking, what's the value of tax qualified? Being tax qualified long-term care.
There were a number of consumer protections that came out along the lines of tax qualified policies. Without delving too deeply into that, I'm going to tell you that as far as I know, there's not one non-tax qualified available today. They were a thing of the past. There might be some coming back from what I hear in the future. But in a nutshell, you follow federal guidelines for what a federally tax qualified long-term care policy is, and provides certain tax-free advantages as well as potential tax benefits on the front end in terms of premium. And Katie, if you want to add anything to that, you're welcome. I know you're knowledgeable there too, but I didn't want to delve too deeply into that because there's no
I think that's a fair comment
out there today.
Right. I think a lot of us that have done this for so many years, there were those non-tax qualified. But as a general rule, the way I always tell anybody is being tax qualified is you simply, when you're getting your benefit, it's not going to be counted. It's not counted as income. It's probably the easiest, quickest synopsis I can tell you. So the thing is we all mention that it's tax qualified, but the fact is that you can't get NTQ anymore anyway. Okay, now the pre-qualification form, I'm getting a lot of those questions. I'm actually going to send an email out. It will have the recording. It'll have our contact information. It's also going to have some marketing pieces that Lawrence and I have discussed, and also some pieces that he thought might be helpful out in the field. And then also Premier has a pre-qualification form. It's going to have some medical questions on it, but it's also going to help us formulate the quote that's best going to meet the needs for your clients. So you will all get that. That is coming out. Another question I'm getting is,
and to support Katie on that, do use her pre-qualification form. We give Katie direct access to our underwriters, and I'm sure she has conversations with them on, if not a daily basis, a nearly daily basis. And, you know, we want to avoid surprises as much as you do. LTC underwriting has become a very interesting thing. And, you know, the more, at least the way I put it in the field to the clients was, look, the more I know, the more I can help you. They're going to get your medical records. They're going to know you every which way from sideways. So please tell me everything I would need to know to make sure that I'm looking at a potential solution that I have a pretty confident idea of whether or not you can get. So the more you can get there, the better off we'll be in terms of Katie helping you with pre-qualification.
Another one I have here is, do you have any examples of a 10-year payment plan, or just examples of different scenarios? I'm not, when you're saying a 10-pay option, and that's the way I'm reading that, and maybe I'm reading that wrong. So, Bill, if I'm saying that wrong, just type back in and let me know. But as for a 10-pay option, I can send you some quote numbers. Are you kind of understanding the same thing I am, Lawrence?
Yeah, it sounds like that one might have been asking for, hey, you know, here's a couple, show them this benefit, what's it cost them for lifetime premium, a 10-pay, and what's the single pay, you know, kind of comparing the three options there. At least that'd be my guess as to that comment.
Yes. Another question is can home health care be used if the insured cannot do 2 ADLs?
Yes. If that's the doctor's plan of care, it's X amount of home care hours per week, and you meet conditions for conditions to be eligible for payment, which would be 2 of 6 ADLs for at least 90 days or severe cognitive impairment, then yes. As long as you don't get a facility-only policy, we do have one available, then yes, home care benefits would be available if that is congruent with the doctor's plan of care.
Another question is there any spouse security benefit for non-medical spouses? That's actually another carrier that does that. And
yep, very familiar with it. I had a number of scenarios where that had come up when I was in the field. I think I actually only sold it once where it made sense to do. No, we don't have a comparable benefit to what that competitor calls their spouse security benefit. It's a really unique feature. I don't think anyone else in the industry has something like that. But in terms of scenarios where folks actually buy it, I actually found it to be pretty rare.
I can tell you that, I mean, it's often brought up, but the amount of times I've seen it is not as many as we would think. No.
Yeah, I know. That was the funny thing I found. I brought it up a lot, and I think it actually went through once.
Yes. Yeah, I would agree with you. In all the years I've seen that carrier come in. Another question we're getting is on partnership policy exchanges. They're asking if the policy premiums would be more expensive after the exchange.
No, we exchange their existing policy for a partnership policy. We're not going to re-underwrite. We're not going to look at attained age or any of that. We exchange the existing policy for a partnership plan. Now, there are a couple of scenarios. So say they didn't buy inflation, we would give them the opportunity to then buy inflation, and that would be a scenario where it would cost more. But if it's an existing policy that would be partnership eligible, they just bought it before, say, Pennsylvania had a partnership approved, then we'll just give them the option to exchange it. It won't cost them any extra.
Perfect. I'm actually going to combine these next couple. They're about specific features. One is, are there restoration of benefits? Also, it is going to be that, are there any varying elimination periods?
Yeah, so we do have a few elimination period options available, 90, 180, 0 if you'd like it, 60 as well. We also have the rider for 0-day home care elimination period. Our elimination period is based on dates of service. I think that's just about all I can say on elimination period.
And then another one is with NGL not having any LTC claims experiences, going through the rate increases. What security does the client have if NGL gets hit hard in claims?
Yeah, so our TPA, who helped us price and actuarially design this product, is also going to be the entity that will pay claims. They've been paying claims for over 30 years, and they administer over 200,000 policies. So the company that we partnered with to work on this product is very experienced in paying claims and has done so for, I want to say between 15 and 20 major carriers over the years. Plus, NGL has a history of over 100 years, not specific to LTC, but we've been in the senior marketplace now since the 90s. So we partnered with the right folks who really know what they're doing, especially in the claims world.
And what's a normal underwriting time frame for you guys?
I'm going to give this answer from the perspective of industry-wide. I think if anyone says it's shorter than 4 to 6 weeks, they're lying to you, and that's any LTC carrier. We do try to market that we want to turn around an app within 30 days. Does it always happen? No. But I'd say 4 to 6 weeks is probably a good average.
Yeah. Nice. Okay. So the question is being, are you reinsured? Where are the claim dollars coming from?
Our reinsurer is Life Care Assurance. They're also the TPA that's doing our claims and new business management. Yep.
Perfect. Well, I think I got most of these handled, but if I'm missing anything, yeah, I'm kind of digging through here. We so appreciate you guys being on here. I mean, we're blown away here at Premier with the relationship we have with NGL, and of course, we're seeing so many different ways that this policy is being utilized, and we're getting more and more inquiries every day. So I welcome those inquiries to keep coming as things come up. Even if you just want to talk about a case, I mean, we have a couple carriers that we use quite often, and I am happy to run through each one of them and help you decipher what the best thing is for your client. So at that, I don't see any more questions. So I want to thank you all again. And Lawrence, I can't thank you enough. And for everyone else, I will be in touch with some emails.
Yeah, thank you, Katie. We appreciate the opportunity to be here, and thank you everyone for your time, and we'll do all we can to help you. We'll look forward to it.
All right. I look forward to hearing from everybody. Talk to you soon.
All right. Take care now.
Bye.